Hello everyone, it's Red with RedDragonLeo.com, and we finally hit the DIA fake print today. It is now fulfilled, and now we have no more upside prints. So for anyone that was bullish, that's your exit point. That doesn't mean that we're immediately going to sell off, but it does mean that the print is hit and there's no more upside left. At least as far as fake print wise. It doesn't mean that it can't chop around here for a day or two before it rolls back over. That's always a possibility. Any of the fake prints do not mean that they are a time to go long or short when the print is hit, but instead to get ahead of the print and go long into the print if we're going up, like this case, or for some longer term, then the best thing you could do is to go short and stay short until the Dow 8300 print is hit. But obviously that would be for someone not leveraged. If you're leveraged, you're playing options, it's a little different game. But so we're definitely going to go down to 8300 sometime before this year's over with. We just don't know when. So obviously there's going to be lots of bounces along the way to shake out bulls and bears both. So the only thing we know for sure is that today we did hit our fake print there on the diamond, and we hit like 118.66, I believe, was what I just looked at. But one of the interesting things that I did notice was that the Dow, the low for the day on the Dow, let's see if I can pull that up for you. The low for the Dow for the day on the Dow was 11,777.99. Now how cool is that? The high last week on the Diamond Spider Trust was 117.77. So here you've got a low that has 1177 in it, and you got a high on the diamond that has 11. Here it is. Let's see here, right here. This is very ritualistic, folks. If I can get that to highlight, but you see it right there, 11,777. Remember our train. Okay, remember our train, the 777 train. Okay, this is twice that we have seen the 777. When you go back and you look at the pre-market for what the market opened on the DIA, of course this ain't going to show it. It's going to be the high. I don't think this shows it because it gapped up, but it was 117.77. Okay. I typed it in the wrong location. Sorry. So 117.77 was the high last Friday, and here we've got 11.77. So from a ritualistic standpoint, yeah, it doesn't say it. It said this is today's. So it doesn't say what it was previously, but it was 117.77 on that. So from ritualistic standpoint, we've got every reason to roll over tomorrow. You also have tomorrow is what? What is tomorrow, folks? What do you think tomorrow is? I'm going to type it out for you. It is 1-11. Nope. -1-11. Now what is that, folks? Anyway, you look at it. That is 9/11. They're telling you something here. The 777. So here you've got 11,777.99 is the low today, and then you have the high was 1117.77 was the high on Friday. This is a ritual, folks. This is a game to them. Okay. It's here. We've hit our fake print. the market is at a top right now. I don't mean it can't chop around here a little bit, but I really expect it to start selling off some tomorrow, and definitely by the end of this week. If it doesn't, then they've obviously changed the plans. I mean, that's all I can tell you. But as far as I can see so far, this is perfectly normal. Nothing has changed. This is exactly what we expected. We did expect it to hit, pierce through it a little bit, and has done that. So we're just looking for something tomorrow to cause the market to sell off in the morning is what we're looking for. So, and if you look at this on a chart basis as well, this is not uncommon to see a move up like this, a slight move up here, and then a rollover afterwards. Look here. You see it right here. You see the big move up. You see another slight continuation up. Then you see a spinning top the next day, and then you see it start to sell off. And that's kind of what we're looking to happen. So tomorrow, Wednesday, maybe it only dips down a little and tries to recover. And then Thursday, boom, he gets a nice down day. And then Friday, I think it will continue with another nice down day. So, so I do believe that we're still going to sell off this week. I don't see us going up here in the 1350 that everybody else is calling for. This is bull fever. I mean, it's insane. From a ritualistic standpoint, we've got every reason in the world to roll over here. From the charts, we certainly have got every reason to roll over. From the fake prints now that we've got hit, we've got every reason to roll over. From sentiment readings, if you look at Cobra's blog, Cobra does a great job on this. Historical sentiments and things like that. He's really good about throwing the stuff up. You can look at, Apple that went after hours. He tells you right here what happens is statistically it's not good when Apple jumps on earnings day because it's already factored in. Boom, they sell off the next day. Here they jump, boom, they sell off. Okay, so, within a day or two, they sell off. So, the bottom line is it's sell the rallies and, the earnings. Okay, that was the Apple, sorry. There's also the VIX. He's telling you about the VIX. He notes here that every time it goes down here and hits these Bollinger bands, sorry, a little tongue twister. You're supposed to sell when it pops back inside, and that's what it's done. And there's historical patterns with that showing that it is accurate. Within a day or two, as you can see, and then so you can look at that on his charts as well. And the other thing we're going to look for is IBM. This is a great thing that I had forgot, so it's always good to go visit Cobra's chart. But I like to go around, bounce around, and try to see what everybody else is saying. Besides, put my own thoughts in there as well. Everybody works better as a team, I do believe. And as you can clearly see, IBM is very important part of the S&P, and this is just some facts that clearly shows that pretty much as goes IBM, so goes the market. So if IBM ends up closing down tomorrow, then we can look to see for the S&P to go down 80% of the time. 11 out of the last 12 quarters, historical reasons, it should go down. So the market, the S&P, everything. So, so we have every reason to see a sell-off. Every single reason. You also have already went over this other chart from Cobra's, the historical after Martin Luther King Day, +1, that was today. That's one day after Martin Luther King Day. The next day is also historically negative, but you can almost call that flat. Because it's not very far below this zero level. But the next day is Thursday. That's a really nasty day, and Friday's a nasty day too. This is historical stuff, going back from 1986 to 2004. So you throw in the past history, you throw in the fake prints, you throw in the rituals, you also throw in the charts right here. Charts, as you can clearly see on the 60-minute, we are way overextended. We're at another rising wedge right here. As you can see, you can draw another line right there, rising wedge. As soon as that one should break, it should easily pop down here to 1280 right off the bat and bang on that, and most likely fill that little gap right there. Of course, that would put it outside of this this support line. If it breaks this, then it's dropping to 1260 pretty quick. And then, you know, after that, well, you know, down there 1240. There's gaps all the way down. There's tons of gaps that need to be filled. So you can see here on the 60, it didn't have nothing for volume today. Just petered around here. Of course, it could pop up and go up if it's manipulated again tomorrow. But POMO or no POMO, I really think that the market is ready to roll over now. If it wants to chop around and do a little spinning top like it did here tomorrow, then maybe it'll do that. And then Thursday down and Friday down, it might do that. But I think we are at the end of this bull market. I really do, folks. 15's not really showing much of direction either way. It's very, very low volume and very low anything on the histogram towers. Even though they're negative, that doesn't really give you much indication. As far as bull flag goes, it was fulfilled until the close. So this sideways consolidation, boom, it popped into the close. That's it. Then back down. So there's no bull flag there that I can see. Same thing here. This is kind of just right in the trend line up. It's not really considered a bull flag. Here it's just a slow ride up. So, you know, this is a do or die time for the bears, folks. It's really it. I don't see much left in the way of you know, for the bulls to go up. I mean, everything seems fulfilled for Elliott Wave as well. And I know I'm not an Elliott Wave expert, and Ron Walker here, this is his chart, and he doesn't claim to be an Elliott Wave expert either, but I think most people can count and see and do it pretty simple. You don't have to be an expert to see that's a 1, a 2, a 3, a 4, and a 5, and you measure this from here to here. The length of this is approximately the length of this wave, the 1 wave and the 5 wave. Well, it is, and it's actually a little bit past it. Technically, I think it just has to meet it to be a proper wave 5. Has to be at least the same length. And you can see that it appears to be, to me, a longer wave 5, which they just call an extended wave. But you can see it's looking ready to roll back down. Here at any time it could roll back down. I don't know the bullish percentage ratio yet, but I know it's way up there in above the 50%. While the bearish percentage is like down in the 20s or less than the 20s. These are historical readings. They truly are. So, you know, we shall see. We shall see if all this comes to pass or not. I am staying short. You know, I'm not going to go jump the gun on this just because of a little bit of a shakeout. That well, we really hadn't had a shakeout, I'm gonna say. I mean, it just barely went over the fake print, so I don't really call that much of a shakeout. But obviously, you can throw this case out the window if they keep on plowing on up to 1350. But I just don't see that happening. Most people are calling for 1300 and then a Pierce of it, I would say, which would be like 1305, 1310 to clear out any stops. But my thinking is that they'll fall short of the 1300 and will roll over now and not actually hit the 1300, or maybe a quick pop in the morning and then roll over and be done with it, but and say goodbye. But so anyway, folks, if you're a bear like me, I wish I would have waited till the day to get short, but what can you say? We knew it was going to go up to this. I just didn't think it was going to quite make it. I thought we might have been close enough with that 11 or that 117.77 print on the DIA. I thought that maybe we were close enough, but I guess not. So, but we are definitely now fulfilled. So no big deal. They are the options I purchased were for February, so I got time on my hands. So I shall wait it out and see, and hopefully the rest of you can suffer a little pain as well, because I think it's going to pay off. If it doesn't pay off this week, then yeah, then we'll have to look for other ways to other places to short. You may have to exit. But for me, I'm a risk taker. What can I say? So you got to make your own choices on that. But the most I can see is a little bit of chopping. Like I said, I'm really looking for maybe a day like this tomorrow, and then Thursday and Friday down, and then a continuation of that next week. So anyway, that's just my thoughts. I just wanted to let you guys know. So I do think that the top is in. It doesn't mean we can't do a Pierce, hit our 1300, make everybody happy, then sell off, because it's a magical number. These numbers are, but whether or not they do it or not, I don't know. To me, if I was the market maker, I'd get close to it and not allow the bears on, and then just tank it beforehand and not let them get on. So, but we'll see. Anyway, that's all I got, guys. Good luck, everybody. See you tomorrow.